Hey guys, welcome back. Today we have 3 more great SPAC stock for you that is still very cheap with a lot of upside potential that you may want to buy soon. Of course, remember this is a SPAC stock, so it's still considered a speculative investment. And lastly, full disclaimer, this is just my opinion and not financial advice, so please do your own further research. With that said, let's get into it. So first, as always, we must do a quick recap of the 4 key strategies for a profitable SPAC trade. Again, I will keep emphasizing this so that we remember to strictly keep with our trading strategies and not to let our emotions get involved. I won't go into too much details as we already learned this in our previous video based on how hedge funds trade SPACs. If you have not watched it, please watch the detailed video explanation on SPAC strategies above. Okay, so number 1, we will only buy SPAC stocks with reputable sponsors or great management. Number 2, we want to buy in at the early IPO stage. Number 3, buy at or near redemption IPO price. And then step number 4, we will sell at deal announcement. Okay, so the first SPAC stock we have is Cerberus Telecom Acquisition, CTAC. This SPAC just raised $250 million in December and is looking for target in the information and communication technology sectors, specifically on companies participating in the 5G revolution. Its CEO is Tim Donahue, who is the former chairman of Sprint Nextel, which as you know is now part of T-Mobile. Tim was very instrumental for the quick turnaround and revival at Sprint. This one is pretty interesting because 5G is a very popular industry and any deal in this area will likely increase the stock price dramatically. Additionally, with Tim's experience and connection in the telecommunication industry, I'm sure he'll be able to find a good deal. Hence, the SPAC could be a very good investment. In looking at step 2, although we will not be able to get in at the IPO price, the stock is still trading at a very cheap range. The stock last traded at only $10.52. However, what I find interesting is that the share volume had seen a recent increase. Yesterday, 516,000 shares traded, which is 7 times the average. This is important because volume is needed to move the stock higher. And 2, either someone is buying up the shares due to inside knowledge, institutional interest, or the SPAC is just getting more media coverage. All of that gives us a very good reason to buy the stock and get in early. Next, let's look at the technical to see the price action and determine a good price to get in. Remember, we want to buy at or near the redemption price of $10. However, as this stock is still relatively new, there isn't enough data to really do a good technical analysis. But just looking at the charts, we see that it peaked at $11 with strong resistance. There's also more resistance at around $10.75. At $10.20, there's very good support. Given our downside risk is capped at $10, which is the base asset value, I'm okay with buying it here at $10.50. If it falls further, I will buy more. Lastly, step 4, sell on deal announcement. At this moment, of course, there's no deal yet. However, I'm sure that there are many great companies in the 5G space that would love to go public. Additionally, as the former CEO of Sprint, Tim is the perfect SPAC CEO to finance a good telecom deal in this space. Thus, this is a very interesting low-risk SPAC with high upside potential. Next, we have SuperNova Partners Acquisition, SPNV. This SPAC just raised $400 million in October and is looking for targets in the technology sector, specifically companies that have a large addressable market, well-defined vision, competitive moat, and the ability to scale. Its CEO is Spencer Rascoff, who is the co-founder of Zillow and Hotwire. Notably, Spencer was the CEO of Zillow for over 10 years, scaling it from a small company to becoming the huge online real estate platform it is today. He led the company through 15 acquisitions, including the acquisition of the larger rival Trulia. Thus, Spencer is definitely highly qualified, and with all his experience and connections, I'm confident he can find a good deal. In looking at step 2, although we will not be able to get in at the IPO price, this stock is still trading in a fairly cheap range. The stock last traded at $11.22. In looking at the technicals and the price action, we see that it peaked at $13. There's further resistance at around $12.50. However, there is good support at $10.80. Thus, given the price now at $11.22, it is fair. I would start buying small here and buy more if it goes lower, using dollar cost averaging. Remember, the base value of this SPAC is $10, so we are protected when it gets that low. I would buy a lot more if it ever gets near $10. Given Spencer's experience, I don't think investors will allow the price to drop that low. Next, we have Sports Entertainment Acquisition Corp, SEAH. This SPAC just raised $400 million in October and is looking for targets in the sports and entertainment sector, as well as the technology and services that are associated with this vertical. For example, these technology service areas include media, ticketing, payment processing, entertainment travel, gaming, loyalty programs, and many others. Its management includes Eric Grubman, who is also the chairman of On Locations Experiences, which is the official hospitality of the NFL. Eric, along with his team, is very involved with NFL, NHL, and other sports teams. Thus, Eric and his team has great knowledge and expertise in this area and will likely be able to find a good deal. If it is in e-gaming, esports, or online gambling, that would definitely send the stock a lot higher. Hence, this could be an interesting SPAC to consider. In looking at step 2, although we will not be able to get in at the IPO price, the stock is still trading in a fairly cheap range. The stock last traded at only $10.56. In looking at the technical and price action, we see that it peaked at $10.80 with a lot of resistance there. There's strong support at $10.10, which makes sense because we know that the base value is $10. Thus, anywhere near $10 is a great buy, given the risk to reward ratio. Here at $10.50 is still cheap because we're still protected at $10. Thus, I would buy a small position here and more if it goes lower. That's all for today. Comment below and let me know what you think about these SPACs. Are there other interesting SPACs that you are considering? And lastly, remember, this is just my opinion and not financial advice, so please do your own further research. Happy trading, and please don't forget to subscribe.